Good evening, class. Good evening.
Good evening. Welcome, sir.
Okay, sir. So today we shall be looking at partnership, partnership assessment. How do we task a partnership business? That is the topic we want to look at today. Last week, the network was so bad that the lecture we are doing on taxation of specialized business, which is taxation of bank, we could not finish it. But as it is, I'm going to arrange a mop-up class during the week where we are going to continue from where we stop on taxation of bank. And probably in the mop-up class, we are also going to look at taxation of real estate. So, but for today, the topic we are looking at is partnership assessment. How do we assess partnership to tax? How do we tax a partnership business? That is what we want to look at today. I've sent the lecture material online, so I will upload it for us to see so that I will share it now so that we can look at it one by one. We know the meaning of partnership. Partnership is a relationship between two or more persons. Partnership is a relationship between two or more persons carrying on a business with a view of making profits. A relationship between two or more persons carrying on a business with a view of what? Making profits. That is meaning of partnership. When two or more persons, they engage in a business with a view of making profits, that is what partnership entails. So now there is a rule and regulation that guide the partnership business. Rule and regulation, the legal procedure or the legal document that guide the partnership business. That legal document that guide partnership business is called partnership deed. The legal document that guide partnership business is called partnership deed. What is partnership deed? Partnership deed is a document that contains the rule and regulation guiding the partnership business. A document that contains the rule and regulation guiding the partnership business. That is partnership deed. A document that contains the rule and regulation that guide the conduct of the partnership business. That is partnership deed. What are the content of partnership deed? What are the content of partnership deed? Number one content of partnership deed, the amount of capital to be contributed by each partner. Number one content of partnership deed, the amount of capital to be contributed by each partner. Another content of partnership deed, the rate of interest on capital. The rate of interest on capital. Another one, the salary payable to partners. The amount of salary payable to partners. The amount of salary payable to partners is another content. Another one, the rate of interest on loan. The rate of interest on loan. The profit and loss sharing ratio is also part of content of partnership deed. The profit and loss sharing ratio. The rate of interest on drawing too is one of the content of partnership deed. The rate of interest on drawings. Is another content of partnership deed. We have another one called method of admission. Method of admission of new partners is another content of partnership deeds. However, in the absence of partnership deed, that means if a partnership business, they want to establish a partnership business, those who want to establish the partnership business, they do not have partnership deed. They do not have partnership deed. What are we going to follow? That means they do not state the rule and regulation guiding the partnership business at the beginning. In the absence of partnership deed, Partnership Act of 1890 will arise. When there is no partnership deed, that means there is no rule and regulation guiding the partnership business. The partnership business will follow Partnership Act of 1890. The partnership business will follow Partnership Act of 1890. What does Partnership Act of 1890 say? The content of Partnership Act of 1890. Number one is each of the partner will contribute the same amount of capital, which means the amount of capital contribution by each of the partner must be equal. The capital contribution by each of the partner must be equal. Another content of Partnership Act of 1890. No partner is entitled to interest on capital. No partner is entitled to interest on capital. Another one, no partner is entitled to salary. No partner is entitled to salaries. So none of the partner will collect salaries. Another one, there will be 5% interest on loan. There will be 5% interest on loan. Profit and loss is going to be shared equally. This is part of the content of Partnership Act of 1890. Profit and loss will be shared equally. Now, the next area we should look at is relevant tax authority for partnership assessment. Who are the relevant tax authority for partnership assessment? I wanted to ask, what type of tax will the partnership pay? What type of tax? Partnership.
Personal
What type
income
of tax
tax.
will the entitled?
Personal income tax.
Personal income tax. We should have it in mind that that partnership business is not subjected to tax. We should have it in mind that partnership business is not subjected to tax. Rather, it is the profit made by profit share to each of the partner that will be assessed to tax. Partnership business is not subjected to tax, but the profit shared by the partner will be assessed to tax in the hand of each partner. ABC and Co is a partnership business. At the end of the day, if ABC and Co make profit, that profit will be shared among the partner A, partner B, partner C. That profit share among the partner A, partner B is going to be the one that will be assessed to tax in the hand of each partner. Any income received by each of the partners in the partnership business will be assessed to tax. So that means the partnership business is not subjected to tax. It is the income received by the partner that will be assessed to tax from the partnership business. Now, who are the relevant tax authority to partnership assessment? The relevant tax authority to partnership assessment is the State Board of Internal Revenue of the principal office in which the partnership business is located in Nigeria. The State Board of Internal Revenue of the principal office in which the partnership business is situated or located in Nigeria. Computation of income of partnership business. What are the income of a partnership business that will be assessed to tax? What are the partnership business income that will be assessed to tax? The partnership business income that will be assessed to tax: salary, interest on capital, partnership salary, interest on capital, interest on loan, cost of passage. All these are income to the partnership business and income to the partnership business. And There are life expenses. So in the partnership business, is an expenses, but in the hand of each partner is an income. Salary in the partnership business is an expense, but to each of the partner is an income to them. Salary paid to a partner. Interest on capital paid to partners too. In the partnership business is an expense, but in the hand of each partner is an income. So the income of the partners that are subjected to tax, the income of a partner that are subjected to tax includes interest on capital, interest on loan, salary of a partners, leave, passage. All these are the income of a partner. In the expenses of a partnership business, there are liable expenses. There are expenses to the partnership business. But to the partners, they are income. They are subjected to tax. Another one, what is the treatment of loss in relation to partnership assessment? What is the treatment of loss in relation to partnership assessment? Treatment of loss in relation to partnership assessment. Treatment of partnership loss. What is the treatment of partnership loss? When you want to compute partnership profit, you now arrive at adjusted loss instead of that adjusted profit. That adjusted loss will be carried forward. It will be carried forward, and it will be set off or relieved against future profits. The adjusted loss will be carried forward and will be set off, relieved against future profits. Now, what is the treatment of changes in partnership business? What are the changes that we have in partnership business, and what are their treatments? Number one changes that we have in partnership business is admission of a partner. Admission of a partner. If a partner is admitted, what is the treatment? If a partner is admitted, what is the treatment? When there is admission of a partner, that new partner that is just admitted, commencement rule will apply to the new partner. That means his income will be assessed based on commencement rule. However, that new partner that was admitted, assuming he's in another partnership business, he resigned in that partnership business for joining a new partnership business, commencement rule will not apply to the new partner. If a partner is in XYZ and Co, he now resigned in XYZ and Co, he want to go and join ABC and Co. Why joining ABC and Co will not apply commencement rule? But if that partner is just coming afresh, he has not been a partner before, he's just coming afresh to come and become a partner, if we join a new partnership business, we are going to apply commencement rule while assessing his income to SARS. We are going to apply commencement rule. Retirement of a partner, another treatment, another changes. Retirement or resignation of a partner, another changes. When a partner retires or resigns or dies or sudden death, cessation rule we apply to that partner that retired or resigned or that death. Cessation rule we apply to the partner. That means his income he collected from partnership business in that year that he resigned will be assessed to tax based on cessation rule. However, cessation rule will not apply if a partner retire or resign to join another partnership business. You resign from one partner in order to join another partnership business. Cessation rule will not apply to such partner. Another treatment of a partnership business. Another treatment of changes in partnership business. Amalgamation of partnership. Amalgamation of what? Partnership. Amalgamation means merger. A, B, C, and Co is a partnership business. X, Y, Z, and Co is a partnership business. A, B, C, and Co, they want to amalgamate together with X, Y, Z, and Co so that they can become 6 partners. That is what is called amalgamation. When partner amalgamates, partnership business amalgamate, A, B, C, and Co want to amalgamate with X, Y, Z, and Co. Commencement rule will not apply. Rather, cessation rule will not apply. That new partner that they just formed, new partnership that they just formed, called ABCXYZ and Co. That is the new partnership name. Is going to inherit the qualified capital expenditure of the old partners, of the old partnership business. That new partnership business that was just formed will inherit the qualified capital expenditure of the old partnership business. And that qualified capital expenditure will transfer to the new partnership business at the tax written down value. The qualified capital expenditure of the old partnership business, which is qualified capital expenditure of ABC and Co, and qualified capital expenditure of XYZ and Co, will be transferred to the new partnership business at the tax written down value. That means only annual allowance will be claimed. That is the tax implication of amalgamation. The last one we are looking at, tax implication of merger, tax implication of conversion of partnership business to limited liability company. tax implication of conversion of a partnership business to limited liability company. When you convert a partnership business to limited liability company, what is the tax implication? Number one, cessation rule we apply to the partnership business. Let me give you an example. ABC and Co is a partnership business. They now want to convert to limited liability company. If they convert to limited liability company, they will now be bearing a name called ABC Limited. ABC and Co is a partnership business. They want to convert to a limited liability company. If they convert to a limited liability company, they will be bearing a name called ABC Limited. What is the tax implication of conversion of partnership business to a limited liability company? What is the tax implication? Number one, cessation rule we apply to the partnership business. ABC and Co. Cessation rule we apply to them. And profits arising from cessation shall be subjected to or based on personal income tax. Cessation rule we apply to ABC and Co. And profit arising from that cessation shall be subjected to personal income tax. That is number one tax implication. Number two tax implication, commencement rule we apply to the new limited company, which is ABC Limited. And profit arising from the commencement is going to be subjected to what type of tax? Company income tax and education tax. Company income tax and what? Education tax. You know, they are now a limited. ABC and Co. It has now converted to ABC Limited. Profit arising from commencement of the new company. Commencement rule we apply to the new limited company, which is ABC Limited. Profit arising from commencement will be subjected to what? Company income tax and what? Education tax. Another one, incorporation expenses incurred by the new company, ABC Limited, shall be treated as a disallowable expenses. Incorporation expenses, which is preliminary expenses incurred by ABC Limited, shall be treated as a disallowable expenses. The limited company will be required to register with who? Federal Inland Revenue Service for VAT and CIT purpose within 6 months from the date of commencement of business. The limited company will be required to register with Federal Inland Revenue Service for VAT and CIT within what?
6 months.
6 months from the date of commencement of business. Another tax implication. Professional fees paid in respect of conversion while converting partnership business to limited liability company. They are going to engage some professional like accountants. We help them prepare liquidation account. They help them prepare their net assets. They will also engage another professional like estate valuer that will value the properties that is taken over. They will also engage professional like legal practitioner that will help them to prepare legal agreements that will be signed. All these professionals, they will pay them professional fee. So professional fees paid in respect of conversion of a partnership business to limited liability company, we attract withholding tax of 5% and value added tax of 7.5%. Another tax implication. The capital of the partner will be converted to ordinary share capital. The capital of the partner will be converted to ordinary share capital, and stamp duty will be paid on that shares capital. The capital of the partner will be converted to ordinary share capital, and stamp duty will be paid on the shares. Another one. The qualified capital expenditure taken over by the limited company is going to be taken over by tax written down value, and only annual allowance will be claimed based on the remaining lifespan. The qualified capital expenditure taken over by the limited company at tax written down value, only annual allowance will be claimed, and the annual allowance will be claimed based on the remaining lifespan. Do we understand? Now,
Please, I have a question.
what is your question?
You said that the capital of the partner will be converted to ordinary shares. Like, didn't get their equity will be converted to ordinary shares capital.
You know,
like
presently, under the partnership business, they will have partner capital, Abi.
Yes, sir.
If they are now a limited company, it's no more a partner capital. It's called what?
An ordinary share capital.
Ordinary share capital. And that ordinary share capital, they have to go and register it with who? Who is going to allot the ordinary share capital to them? CAC. Corporate Affairs Commission. You know that partnership business. Why forming new company now called Limited? That new company will go and register with Corporate Affairs Commission as ABC Limited. Abi? Why registering? They will ask them, who is your shareholder? The shareholder, they are the old partner. They will now allot shares to the shareholder. That ordinary share capital allotted to the shareholder. Each of the shareholder will be expected to pay stamp duties to the CAC. Because ABC Limited, we need to register with CAC. It's now a limited company now. As a limited liability company. That is what we need to know. Let's go to a question. I will start with question 3. Partnership. What is the basis of assessment of a partnership business? If they ask you what is the basis of assessment of a partnership business, for an existing partner, preceding year basis. For a new partner, commencement true, while using preceding year basis too. For a retired partner, cessation rule, which may be either preceding year or actual year basis. But for an existing partner, which is going concern partner, we are going to use preceding year basis. That means the profit of last year, 2024, will be assessed to tax in which year? In 2025. Profit of 2024, income of 2024 will be assessed to tax in 2025. Let's look at question 3. Somebody should help us with question 3. Oh yeah. Somebody should help us with question 3.
Question 3. Muyiwa, Sheyi, and Akpan are partners in an accounting firm in Lagos. Wizak & Co. in bracket Chartered Accountants. The statement of profits or loss for the year ended December 31st, 2020 is as shown below. So we have the gross profit, 65 million naira, salaries and wages, 5,100,000 naira, office expenses, 4 million naira, provision for bad debt, 2 million naira, depreciation, 1,500,000 naira, repairs and maintenance, 2,500,000 naira, donations, 400,000 naira, training of staff, 2 million naira, medical expenses, 1,200,000 naira, traveling expenses, 500,000 naira, interest on loan granted by Sheyi, 400,000 naira, interest on capital accounts, Muyiwa, 1,200,000 naira, for Sheyi, 600,000 naira, for Akpan, 250,000 naira. Their net profit for the year is 43,350,000 naira. Additional information is as follows. 1. Donation was for laying of foundation of the new St. Peter's Church. 2. The vehicle of Muyiwa's wife involved in an accident was repaired of a cost of 550,000 naira, and this was included in repairs and maintenance. 3. Medical expenses in the sum of 500,000 naira representing the cost of flying the principal's partner's father-in-law abroad for treatment was funded by the partnership. 4. ACMA made a voluntary contribution of 500,000 naira under the Pension Reforms Act 2004 as amended. 5. Capital allowances agreed with the tax authority was 4 million naira. And 6. Partners sharing profits. Muiwa 6, Shei 4, Akpan 2. So we are required to compute 1. The adjusted income of Musek and Co., their chartered accountants for tax purposes. B. The chargeable income of each partner. 6 marks. C. The tax payable by each of the partners. 8 marks.
Okay. In this question, do we have any partner that was just admitted? No. We have 3 partners. Me, Yiwa, Sheyi, and my good brother, Akman. These are the 3 partners. They have been in business for a while. They are old partner, they are existing partner. Nobody was just admitted. We are not told any of the partner was just admitted. The first question, we are asked to compute adjusted income for Museb and Co. That means they are asking us to compute adjusted profit for Museb and Co. Museb and Co chartered accountants computation of share of profit. That adjusted profit, after computing it, we need to share it among the partners. How do we compute adjusted profit? The net profit given to us in the question. This net profit, we are going to add back what?
Salable expenses.
The salable expenses. This is the net profit, 43,350,000. Add back the salable what? Expenses. In this question, what are the disallowable expenses? Number 1 disallowable expenses we have is what?
Depreciation.
Depreciation. Depreciation is disallowed under the tax law. It's not allowed. Depreciation is disallowed under the tax law. Another one, apart from depreciation, another one, provision for bad debt. Provision for what? Provision for bad debt too. If it is general, is disallowed. Specific provision for bad debt is allowed. General is disallowed. However, in a question, if the examiner writes provision for bad debt, you are going to assume it is what?
General.
It is general. Since this question, they do not write either specific or general, we are going to assume it's what? This provision for bad debt is general. We assume it is general. Donation. Donations too. Who do we donate to? Who do we donate to? Note 1. Donation was for laying of foundation of new what?
Church.
Church. If we donate to church, is it allowable expenses or disallowable expenses?
Church is not a government institution, so I would say it as a disallowable expense.
Thank you very much. Church is not a government institution, and church is not an NGO or orphanage home. If you donate to government institution, it's allowed. If you donate to NGO, it's allowed. If you donate to orphanage home, it's allowed. So this donation, I will disallow it. I'm going to disallow it. Which other one are we going to disallow? Interest on loan granted by Sheyi, one of the partner, Sheyi, he give the business loan. He now charge them interest. Is it allowed or disallowed? It is allowed.
The purpose of the business.
Interest on capital granted by Miwa Sheyi Apan. Is it allowed or disallowed? It is allowed. Partnership, they are expected to collect interest on their capital. It is allowed as an expenses in the partnership business. However, let's look at note 2. What is note 2 saying? Vehicle of me, one wife, involved in what? In an accident and was repaired at the cost of how much? 550. 550 was included in repairs and maintenance. That means this 550 they are talking about is already included in what? Donation, paying of foundation is disallowed. Repair and maintenance too. At repair and maintenance, note B, there is a note on repair and maintenance. Vehicle of me, one wife, was involved in accidents. Vehicle of me, one wife, was involved in what? Accident, in an accident, and was repaired at a cost of how much? 550,000. This was included in repairs and maintenance. Is these expenses allowable or disallowed? It is disallowed because is repair and maintenance of me, one wife vehicle. They now include it in the repair and maintenance. The business 2.5. Inside 2.5, that means 550,000 was for the repair of me was vehicle. So that is private expense, do not be allowed to disallow. It will disallow. Another one that will be disallowed, look at medical expenses. The 500,000 represents the cost of fleeing principal partner to abroad. They now include it in the business medical expenses. Look at the medical expenses, 1.2. This business medical expenses, 1.2. They include 500,000 the father-in-law for treatment. Is he allowed or disallowed? Disallowed. is disallowed because it is private expenses. It is not for. Now, let's go and conclude. Why putting my adjusted income? Net profit is 43,350,000. Normal disallowable expenses I have is depreciation, 1.5 million, followed by provision of bad debt, how much? 2 million, followed by donation. How much is donation? 400,000. Repair and maintenance, which one are disallowed? Which one are disallowed? 5. Why? By it is private expenses, not for business. Medical expenses, which one are we? The one that is used without managing partner's wife to abroad. Partner father-in-law is used to fly managing partner father-in-law to abroad. With this, do you understand? Why this? We add back the salary expenses. If we add back the salary expenses, is 490,000. If we add, it will give us adjusted profit of 4,300,000. It will give us adjusted profit of what? 48 million. Is what to give us the profit of 4,300,000. That's so that is just what we have. After adjusted less capital, after the adjusted profit less capital allowance, we are going to less capital allowance from the adjusted profit. We are going to less capital allowance. Capital allowance in the question is ₦1 million. If the capital allowance from adjusted profit, that means your profit that is going to remain is 40,300,000. This 4,100,000, we are going to share it among the partners. We are going to share it among partners. What is the profit sharing ratio in the question? What is the profit sharing ratio? What is the profit sharing ratio? The profit sharing ratio, me will share 6, Sheyi 4, ICAN 2. Me was 6, Sheyi 4, ICAN 2. So for us to determine the share of profit for me was 6 over 12. 6 over what? 12. Do you understand how we get 12? 6 plus 4 plus 2, it will give you 12. So, meanwhile, share of profit will be 6 over 12 times 44,300,000. Is going to give you 22,150,000. That is for me. What of Sheyi share of profit? Sheyi share of profit. 4 over what? 4 over 12 times 44,300,000. It will give you 14,766,667. What of ICAN share of profit?
2 over 12.
Times 44,300,000. It will give us 7,383,333. That is the first question, adjusted income. Second question said, chargeable income of each partner. Chargeable income of each partner. Income of each partner. That is the second question. Chargeable income of each partner. Second question and third question, I will do them together. And tax payable by each partner. Chargeable income of each partner and tax payable by each partner, I will do them together. If I want to do them, I will ask myself, what are the income received by each of the partner from this partnership business? What are the income? Share of profit will be treated as earned income. That share of profit we share among the partner in question A. For Muiwa, 22,150. For Sheyi, 14,766,667. For Akpan, 7,383,333. What other income received by each of the partner in the partnership business? If you go to the expenses, interest on what? On capital. You know, in the partnership business is an expenses, but to the partner is an income. Interest on capital is part of earned income too. I will treat it as earned income. For Tiwa, his own interest on capital is 1.2. For Sheyi, 6. Why for Akpan is what? 250. What other income the partner received from partnership business? What other income? Let's go to the expenses side. Which person also receive another benefit apart from interest on capital? Who can tell me? Interest on loan. Interest on what?
Loan.
Loan. Who receive interest on loan? Who receive interest on loan? Sheyi is the one that receive interest on loan. Interest on loan was received by who? Sheyi. Is an income to Sheyi. But while computing the chargeable income, interest on loan will be treated as an unearned income. You can see under Sheyi, unearned income, 400,000 interest on loan. Can you see that? At the end of the day, you are going to total the income together. The total income for Miwa is 23,350,000. The total income for Sheyi is 15,766,667. Why the total income for ICAN is what? 7.6 million 33333. After total income, if you remember your personal income tax format, after total income, what am I going to deduct? Why computing personal income after total income? I will less tax exempt. If you remember, under our personal income tax, what are the examples of tax exempt? Who can give me 4 examples of tax exempt? Four examples of tax exempt. Who can give me the example of tax exempt? Oh yeah, now tax exempt. What are the examples of tax exempt? If you remember our personal income tax exempt, let me help you out. Pension contribution. That is number 1. Which other one do you know as part of tax exempt, apart from pension contribution? National Housing Fund, National Health Insurance Scheme, NHF Housing Fund, NHIS Health Insurance Scheme. Which other one? Who can remind me?
Benefit in kind.
No, tax exempt.
Pension contribution.
I've mentioned pension contribution. Life what?
Life assurance.
Life assurance policy is part of tax exempt. Go back to this question. Do we have any tax exempt in this question for any of the partner?
Yes, sir.
Which one do we have?
We have pension.
Pension. Who is contributing for pension? Who pay for pension contribution?
ICAN.
ICAN. ICAN pay for pension contribution. So while computing the taxable income, after total income, you less tax exempt. The person that has tax exempt is ICAN, 500,000. If you less tax exempt, you are going to get what is called what? Gross income. You are going to get what is called what? Gross income. How much is gross income for ICAN? For Miwa, 23,350,000. The gross income for Sheyi, 15,766,667. Why the gross income for the other man? 7,123,333. After that, after your gross income, what are you going to less from your gross income? While computing personal income tax, what are you going to less? Tax relief, which is CRA. How do we get CRA, consolidated relief allowance? Higher of 200,000 or 1% of what?
Gross income.
Gross income. In the case of Muiwa, which one is higher? Is it 1% of gross income or 200,000? For Muiwa, which one is higher?
1% of gross income.
1% of gross income will give us 233,500. Abi? In the case of Sheyi, which one is higher? Is it 1% of gross income or 200,000?
200,000.
200,000 is higher. 1% will give you 157,666. That means 200,000 is higher. In the case of ICAN, which one is higher? Is it 1% or 200,000?
200,000.
200,000. Plus, we are still on consolidated relief allowance. Plus 20% of what? Gross income. 20% of 23,350,000 will give us 4,670,000. 20% of 15,766,667 will give us 3,153,333. 20% of 7,133,333 will give us 1,426,667. When you minus them, the consolidated relief allowance from gross income, you will get chargeable income. You will get chargeable income. The chargeable income for Miwa is 18,680,000. The chargeable income for Sheyi is what? 12,613,333. Why the chargeable income for ICAN is 5.7 million 6,667. From the chargeable income, what are you now going to compute? From the chargeable income, what are we going to compute?
This be a composite
Tax
risk.
liability. Abi,
Yes, sir.
you compute your tax liability. First 300,000 at what percentage?
7%.
7%. It will give us 21,000. It's going to apply to 3 of them. Second 300,000 at 11%, 33,000 is going to apply to 3 of them too. Because the chargeable income we have on ground is much. Can we still go further? Yes. Next 500,000 at what percentage? At 15%, 75,000. It will apply to 3 of them. Next 500,000 at what percentage?
19%.
It will give us what?
95,000.
It will still apply to 3 of them because the chargeable income that they have is more than 3.2 million. Next 1.6 at 21%. It will give us 336,000. It will apply to 3 of them. The next thing you now do is for Miwa M. How much is chargeable income of Miwa?
It's 80,000.
What are we going to minus from it? If we add 300, 500, 1.6, if we add all of them together, how much is it going to give you?
3.2.
3.2. We are going to minus it from that 18,680,000. The balance is going to be taxed at what percentage?
24%.
At 24%. The same thing for Sheyi. His chargeable income is 12,613,000 minus 3.2. The balance will be charged as 24%. The same thing for ICAN. 5,706,667 minus 3.2. The balance will be charged as 24%. That one will give us 601,600. At the end of the day, the total tax Muiwa will pay is how much? How much is the total tax for Muiwa? $4,275,200. The total tax for Sheyi, 2,819,200. Why the total tax for ICAN, 1,161,600. Hope this is clear. Do you understand?
No, sir.
Which one you don't understand?
From the less tax relief. Please, I want to find out, first of all, those percentages, is it a standard that somebody should know, or is there any, on what
It's a
basis?
standard, and they will give us in the exam hall. It's a
Okay.
standard for personal income tax, but it's good we know it often. Which other area do you have?
This
Concern.
higher of 200, is it a value that is more than 200? I'm trying to understand, or 1% of the gross income. What exactly are we, on what basis are the higher of
Look at, okay, take for instance, Miwa, what is gross income for Miwa?
23,350,000?
1% of it.
Okay. That's the 2,335,000.
Is it higher than 200,000?
Yes.
That is the reason for we are going to take 2,335,000. Sheyi, his unchargeable income is how much?
His own is 12,613.
Sheyi, gross income, sorry.
15,766.7.
1% of it.
15,766. 67 times 1. That's 157,666.67.
Is it higher than 200,000?
Is less than.
So which one are we going to take?
We are still taking the first one.
We will take the 200,000. Since that 1% is less. Do you understand?
Yes, sir.
Look at the one of Akpan. 1% of his gross income.
Yes. 71,333.
Of his gross income, we give you 71,333. Is it higher than 200,000?
No.
So which one are we going to take?
200,000.
You can see, it's clear. Any other question?
Sir, the question I want to ask is, do they say this as a composite question?
They set it as a compulsory question.
Mm-hmm.
Yes.
Okay.
Let's look at one more question. Let's look at one more question. One more question. Question 2. What is question 2? Somebody should help us with question 2. Question 2. Oh yeah, somebody should help us read. Obi Consult.
Okay. Obi Consult is a civil engineering consulting firm of many years. The founding partners are BB, Koshe, and Fowora. The financial year end of the firm is December 31st each year. The following information was extracted from the partnership financial statements / records for the year ended 31st December 2020. Net profit of the year, 21,575,000. Provision for depreciation, 13,250,000. Fine paid in respect of traffic question III. Fine paid in respect of traffic offence committed by the principal partner's son while driving his father to catch up a flight to Abuja for a business transaction of 25,000. Donation to politician in business, 150,000. Donation to National Library Board of Nigeria, 165,000. Profit from sale of excavator, 1,600,000. Capital allowances, 6,575,000. Balancing allowance, 677,000. Balancing charges, 1,315,000. The following additional information was provided. Profit sharing ratio as agreed. BB 1/2, Kose 1/4, Fowora 1/4. BB and Fowora are both entitled to interest of 5% per annum on loan of 10,500,000 each. Introduced to the firm. Fowora's loan was refunded in full on the day of his retirement. Salaries paid to the partners were BB 10,800,000, Kose 8,250,000, Fowora 8,250,000. On July 31st, 2020, Fowora, who is the oldest of the partners, retired at the mandatory age of 60 years. In order to fill the vacuum created by Fowora's retirement, JC was admitted as a new partner on August 1, 2020, based on an annual salary of 8,250,000. JC is also entitled to 5% interest per annum, having introduced a fresh loan of 7 million on August 1, 2020. The profit sharing ratios after JC's admission are as follows: BB 1/2, Kose 7/20, JC 3/20. Fowora has no further income within 6 months after his retirement, but a sum of 900,000, which was paid towards his annual vacation, was included in the partnership expenses for the year. The tax authority agreed that the business should be treated as ongoing such that commencement or cessation rule will not apply. You are required to 1. Compute the adjusted assessable income of the partnership. 2. Determine the share of profits among the partners. 3. Show relevant working for prorated salaries and interest on loan of the affected partners, assuming simple interest. 4. Compute the assessable income of each partner.
Okay, thank you very much. Thank you very much. So in this question now, we have admission of a new partner. We also have retirement of a partner. One of the partners retired. A new partner was just admitted. In this question, Fowora retired while JC was admitted. Now, first thing we need to do is for us to compute adjusted profits. Adjusted profits. We need to compute what? Adjusted profits. we need to compute what? Adjusted profit. How do we compute the adjusted profit? We are given net profit for the year 21,575,000. The net profit, we are going to add backwards to the net profit. What are we going to add back? That is the first question they ask us to compute adjusted or accessible income of the partners. What are we going to add back to the net profit?
Disallowable
expenses. Look at the expenses given to us. Tell me whether it's allowed or disallowed. Provision for depreciation, is it allowed?
Disallowed.
Is disallowed.
Allowed.
Fine, paid in respect of traffic offense by principal partner's son while driving his father to cash up a flight for Abuja business trip, 25,000. Is it allowed?
No.
Anything fines and penalties is not allowed in the tax law. It's a disallowable expenses. Donation to politician in business, is it allowed?
No.
No. Donation to National Library Board of Nigeria, is it allowed?
Yes.
Yes. So, while computing our adjusted profit, we add disallowable expenses back. In these disallowable expenses, we have provision for depreciation, fine paid, donation to politician. We add back to the profit. In this question again, we have a non-taxable income. Which non-taxable income do we have in this question? Profit from sale of fixed asset. Excavator is a fixed asset. When you sell fixed asset, you make a profit. You don't pay tax. So you are going to less non-taxable income in this question. You are going to less the profit from sale of excavator, which is a non-taxable income. It's not subjected to tax. It has been added to the net profit already. You are going to less it. You will get adjusted what? Profit. Your adjusted profit will be 33,400,000. While adding disallowable expenses to the net profit and you less non-taxable income, you will get adjusted profit of what? 33,400,000. If you get that, from adjusted profit, you need to less capital allowance. Have you done a topic called capital allowance? My colleague have taken capital allowance, have you?
We missed it, or some of us, like we said last time, we did not join. We've not joined then.
Go and watch the video lecture now.
No time.
No time. Please create a little time. In this question, we have balancing charge. If we add balancing charge, are we going to add it to the net profit or less it? Are we going to add it to the adjusted profit or less it from adjusted profit? Balancing charge is part of capital allowance too. We are adding balancing charge. We less capital allowance. We also less balancing allowance. If we are giving balancing charge, we add it to adjusted profit. Add. If we are giving balancing allowance, we less it. If we are giving capital allowance, we also less it. So we are giving balancing charge. I will add it to adjusted profit. We are giving balancing allowance. I will less it. We are giving capital allowance. I will less it. If we add balancing charge, less balancing allowance and capital allowance, the share of profit that is remaining will give you 27,463,000. That is the share of profit remaining. This share of profit remaining, you are going to share it among the partners. In this question, how many partners do we have? How many partners do we have?
Three of them.
3 of them. One later joined them, making what?
4 2.
4. JC was admitted as a new partner. 1 retired. Now, that share of profit, this share of profit that we get after we have less our capital allowance, this 27,463,000, we are going to divide it into 2. Share of profit pre-admission of JC. That is A. B. Share of profit post-admission of JC. Before they admit JC, how many months? Which month they admit JC? Which of the month that they admit JC as a partner? First of what? August. That means before admission of JC is from January to what? July. That is how many months?
7 months.
7 months. 7 over 12 times the whole 12-month profit. The whole 12-month share of profit is 27,463. 27,463,000. So 7 over 12 times 27,463,000. It will give you 16,020,083. That is the share of profit. That is the profit that they will share before they admit JC. Do you know how we get this 16,020,080? 7 over 12 times what?
27,460.
Yes. That means the profit of January to July. Before they admit JC, how many partners we have? And what is the profit sharing ratio? Before they admit JC, how many partners we have? What is the profit sharing ratio? We have BB, Kose, and Fowora. Before they admit JC, the profit sharing ratio is 1 over 2, 1 over 4, 1 over 4. So this 16,020,083, we are going to share it to the partner that is available before they admit JC based on old profit sharing ratio. BB will collect 1 over 2. 1 over 2 of 16,020,083, it will give you 8,010,042. 1/4 of 16,020,083 for COSE, it will give you 4,005,021. The same thing for FORA, 1/4. This is the share of profit before they admit JC. B, now, share of profit post admission of JC. They admit JC 1st of August. From 1st of August to 31st of December is how many months? From 1st of August to 31st of December is how many months? That is how many months?
5 months.
5 months. Five over 12 times the whole profit for 12 months. 5 over 12 times the whole profit for 12 months. What is the whole share of profit for 12 months?
27,463.
27,463,000. So 5 over 12 times 27,463,000. It will give us 11 million. It will give us 11 million 442,917. That is the profit available post admission. After they admit JC, how many partners exist? After they admit JC, how many partners do we now have?
4.
3. One of the partners retire.
Oh, okay.
Immediately they admit JC, how many? One of the partners retire. If you look at the question, Fowora retired when? Fowora retired when?
August 1st.
The day that they admit JC, Fowora retired. That means after admission of JC, how many partners do we now have?
3
3
partners.
Huh?
3 partners.
Who are the 3 partners we now have?
We have BB and JC.
We now have BB, COSE, and what?
JC.
JC. What is the profit sharing ratio after admitting JC?
BB is 1/2.
COSE,
7/20.
JC.
3/20.
That this 11 million 442,917 is going to be shared using the new profit sharing ratio. 1/2 of 11 million 442,917 will give you 5,721,458. One 7/20 of 11 million 442,917 will give you 4,005,021. 3/20 of 11 million 442,917. We give you what? 1,716,438. Now, we have done B part of the question. B said we should share the profit among the partners, which we have done. C said we should prorate the salary and interest. Proration of salary and interest. Which we have. Proration of salaries and interest. Let's go to number 4 question. The 4 questions said what? Compute the accessible income of each partner. They are asking for chargeable income of each of the partner. How do we compute chargeable income for each of the partner? OB Consult is the name of the business. Computation of chargeable income. Okay. For 2021 year of assessment. So, ladies and gentlemen, by next week, I was told another class wants to start now. By next week, we are going to start from this area. So I was told we want to start PSAT now. So we are going to start from this area by next week. How do we compute the chargeable income? Thank you very much. Any question, any observation? Any question, any observation?
No, sir.
So by next week, we will start from computing the chargeable income. Thank you very much.